Warren Buffett, why real estate is a lousy investment? What if one of the smartest businessmen in the world says that real estate is not a good investment? Warren Buffett, who is known for being very smart with money, has some interesting thoughts on how much real estate is worth. What is his reasoning behind this difficult stance, and how does it differ from common ways of investing? Watch this video to find out what Buffett thinks about real estate and why he might not think it's the best investment. Warren Buffett is of the opinion that real estate is a poor investment when compared to the possibilities provided by companies and equities. This statement is stated in relation to the ownership of a business, as he is of the opinion that money can be made in real estate, particularly during periods of market mispricing of properties. He does not compete with others who are outside of his circle of competence because his advantage lies in estimating the value of future cash flows generated by the company rather than in properties and buildings. Additionally, he is of the opinion that the real estate market is significantly more efficient than the stock market. This may be attributed in part to the high transaction fees that are associated with buying and selling real estate. Last but not least, Berkshire Hathaway, being an S Corp, is not constituted in a way that allows it to function effectively in the real estate market. During one of his shareholder meetings, Buffett provided an explanation as to why he does not invest in real estate. Let's have a look at his explanation in his own words. Why Warren Buffett does not get involved in the real estate market? When it comes to investing his money, Warren Buffett favors doing so in items that not only generate a steady flow of cash but also increase in value over time. His preferred investment vehicles for Berkshire Hathaway and himself are ownership of entire firms and investments in stocks of the greatest companies at a decent price. He also prefers to invest in the stocks of the best companies. Real estate, despite the fact that it can maintain its value during inflation as a hedge against a currency that is devaluing the majority of the time and generates some cash flow, does not have the ability to scale since it does not have the value of an asset that can be produced. As a hedge against the effects of a recession, Buffett favors holding stocks of companies that produce commodities such as oil and gold rather than real estate. When he was younger, he purchased and owned acreage that provided a crop every season. He did this when he was younger. The cash flow structure of collecting rents on real estate assets is not something that he is interested in, but he does care about the productive value of farming. When compared to the fixed number of tenants that are available to rent and lease to with real estate, I would also guess that he preferred the diversity of additional clients that comes with a business that has the capacity to develop and scale. The two of us have both had a considerable amount of expertise in the field of real estate, and Charlie established his early financial success in the field. Despite the fact that real estate is not a commodity, I believe that it is typically priced more appropriately, particularly more developed real estate, the majority of the time. This is the second and most essential point. Now, during the RTC period, when you had enormous numbers of transactions and you had an owner who didn't want to be an owner in a very big degree, and they didn't know what the hell they owned and all of that kind of thing, you had a situation where you had a lot of transactions. In other words, you had a lot of mispricing back then, and I know a few people in this room who made a lot of money off of that, but under ordinary circumstances, it is difficult to find real estate that is mispriced. This is Warren Buffett. I mean, when I look at the transactions that real estate investment trusts, REITs, are currently engaging in, and you get a lot of information on that kind of thing, they are pretty comparable. And it is a competitive world, and they all know what a class of office building is going to yield, whether it is in Chicago or wherever it may be. It is difficult to dispute with the conventional knowledge that is currently prevalent in the real estate industry the most of the time. At the very least, it is possible that all of them are incorrect due to some rare occurrences. On occasion, there have been, and you are aware that there may be, significant possibilities in the industry. Nevertheless, if they do exist, it will undoubtedly be due to the fact that there is a great deal of chaos in real estate financing for a variety of reasons. In our experience with real estate financing, we have found that it is necessary to have the money cut off to a significant degree in order to most likely have a significant mispricing across the board. There is a great deal of money that may be generated through the ownership of productive assets, such as farms, real estate, and yes, businesses. The majority of owners of properties of this kind will be rewarded. The only things that are necessary are the passage of time, an inner peace, a substantial amount of diversification, and a reduction in the number of transactions and costs. This is Warren Buffett. What is the total amount of real estate that Warren Buffett owns? During the year 2018, Warren Buffett sold his second home in Laguna Beach, California for a total price of $7.5 million. In the beginning of 2017, he put the beach mansion up for sale for the first time at a price of $11 million. In August of that year, he brought the price down to $7.9 million, which was a reduction of more than $3 million. The home was purchased by Buffett in 1971 for the sum of $150,000, which when adjusted for inflation is equivalent to $1.1 million. Therefore, he was successful in the one real estate investment that he made, which he purchased at the time with the encouragement of his wife. Following the sale of his second home, his sole real estate investment is in his own personal residence, as well as any real estate investment trusts, REITs, or properties that may be held by Berkshire Hathaway and which he would indirectly own through his BRK as a stock. Berkshire has been a shareholder in the real estate investment trust Store Capital Corporation, and in 2017, the company invested $377 million in its stock. However, as of right now, Berkshire retains only half of that large of a position in the REIT. This is because the company reduced its holdings by 53% in the most recent June Q213 filing, leaving it with a remaining investment of $180 million. The name Store Capital Corporation comes from the fact that it is a real estate investment trust, REIT, that is managed internally and is a net lease REIT. It is the industry leader in the purchase, investment, and management of single-tenant operational real estate, which is also the target market for the company. In addition to being one of the largest and most rapidly expanding net lease real estate investment trusts, REITs, it possesses a sizable and diverse portfolio of investments in over 2,500 property sites across the United States, almost all of which are profit centers. Warren Buffett continues to reside in the home that he purchased in 1958 for the price of $31,500. The amount of money he spent in 1958 was equivalent to $322,816 when adjusted for inflation to $2022. This stucco home is 6,570 square feet in size, has 5 bedrooms and 2.5 bathrooms. It is situated on a plot of land that is less than 1 acre in size. His house is situated in a prestigious area in Omaha, Nebraska in the United States. The value of the property has reportedly increased to an estimated $1.24 million, as stated by Zillow, based on comparable properties in the vicinity, which was most likely driven up by his celebrity. Buffett once referred to it as the third best investment he's ever made, but he later reflected on how much more money he would have gained if the money he spent on the property had been utilized to purchase Berkshire Hathaway stock in 1958. Hopefully, he was kidding about the situation. This is a pretty modest home for one of the wealthiest individuals in the world, as it accounts for less than 1% of his overall net worth when taken into consideration. In spite of the fact that he could have whatever house he wanted anywhere in the world, he rather enjoys the simplicity of living in Nebraska, where he was born and raised. At that location, he has never been unhappy and he has never seen a need to relocate. It is obvious that he does not engage in real estate investing. Rather, he focuses on his own advantage in the stock market and enterprises where he can access the greatest possible leverage and potential for growth. Curious about Warren Buffett's surprising take on real estate investment? Subscribe now to explore his controversial views and stay updated on all things investing.